Our job is to find hot money. That's how we think of what we're doing. At our firm, hot money is somebody new that comes in the market and is willing to do something a little more aggressive than everybody else. That's the goal. You want to find hot money, you want to know where the market's going, where the new hot money is coming from, and make sure your clients have access to that hot money. I'm Simon Ziff with the Ziff Real Estate Group. We arrange debt equity financing all over the country. A real estate owner comes to us and they have a project, they want to build it, they want to buy it, but they also need the money. And while they may be in the market for money once a year, twice a year, 4 times a year, we're in the market every day. People that do what I do, real estate capital advisors, are talking to capital every day. It's not simply picking up the phone and calling 5 people or 10 people. You have to know how you're going to pitch it. You have to know who you're going to pitch first. So you have to keep your bank honest and let them know they're competing. Sponsorship is the user of the money, the owner of the real estate, the developer. And it's important. What's their reputation? Do they have a reputation for being good people? Do they work well with their partners? Do they work well with their banks and other lenders? And there have been many sponsors over the years that I just hope don't call me because I don't want to represent them. A bad sponsor is somebody that typically hasn't treated people well, and everyone knows it. For example, they may have exercised capital. They may have gone all the way to the 1-yard line and not closed. They may have given back properties, which is okay, you can give back properties, but they may have given back properties in a bad way with a fight. And over time, people that do that build a reputation in the industry. So we're an advisor. You come to us and we're trying to figure out how to help you. How do we make your deal work? How can it get financed? And then we'll figure the rest out. What do we charge? Absolutely simple. Whatever the market will bear. $20 million deals are generally a point. $500 million deals are generally less than half a point. And there's everything in between. The business has changed a lot since I started. There were boutique firms and less institutional sponsors. Information is more available so people know what's going on. You're less likely to walk in a room and find a deal that nobody knows about and just have the assignment. There's so much new capital all the time. Our job is to find hot money. Hot money is somebody new that comes in the market and is willing to do something a little more aggressive than everybody else. That's the goal. A lot of apartment buildings are over leveraged and their loans are coming due. And the owner needs to fill the gap between what their new loan will look like and what they can borrow. And that gap, that call it 10% of the loan or 15% of the total loan, is where everybody wants to lend today. And in fact has been since rates spiked a couple years ago. Unfortunately for those investors, there haven't been as many of those opportunities as they had hoped because many of the lenders that hold the original loans are kicking the can and not requiring the owners to fill the gap. They're just extending their loans. But if you had to pick an area of capital that everybody wants to invest, it's in multifamily and it's in resizing the financing.